Hey there, traders. This is the weekend wrap. The week is over for me, at least, and let's make a rundown of what we have shaken here heading into the new week. Next week should be exciting because it's the first week, and for some reason, I'm going to get non-farm payroll today because it is the first Friday of the week. But we do have a sequester scenario playing out, and it looks like the government will probably end up taking the cuts, and then the Republicans and Democrats are going to position against each other. To tell you the truth, I don't have the patience for political theater any longer. We'll just see how it plays out, and that's basically why most traders, I think, were sidelined, but also holding on to holding on to profits that they made through the week. There was a lot of ways to throughout the month. Excuse me. There were a lot of ways. 50 back traders did quite well this last month, and actually, my personal swing trading scalping system did quite well. Looks like up over 1,000 pips combined for the month. So that is a happy month. If all the trades are taken, you have to swallow the gains. But let's swallow the losses every once in a while, which this week was a little bit choppy. So you were better staying sidelined, which was the case that I actually took. That I actually followed. Let's see here. Let's start out with going through the majors. First, looking at the Euro, Aussie, and so forth. The Euro USD continued to fall today. The pair is currently testing this major support and resistance zone right here at the bottom of the range between 130 and 129.90, 129.90, let's say. And this is a big bull bear line. Well, not bull bear line, support line. If we break below this, we can continue lower. And you can see we obviously are definitely still making lower highs and lower highs and lower lows, so we could continue once again all the way back to the bottom of this trend line. If we're going to target, if we get a close below this at 129.95.90, let's say, we could target a move down towards the 129.09, 129.10, let's just say 129 level, and we do actually have pretty significant price support right here at 128.80, so that would be the target for a hold below this level before we would get a rebound, probably right back around to this level if we continue the downward trajectory. But you have to keep in mind that it is a new month, and new months often bring new trading outlooks, because I mean, if we look at this, it's pretty amazing. When did the euro return around at 137? Well, right on February 1st, and you can see that the pair did move down at 700 pips throughout the month. And we'll look into the new year. When did the euro start to have its advance higher here? Well, when did it continue from this point? We're right in the beginning of January here. So, well, you can see actually it did go down, but it did reverse back here. And when traders came back about January 3rd or 4th, you can see that we did continue our 700 pip advance. So we can see actually for the year at this point, we are down a little bit, down about 200 pips, not down personally, like the pair is down about 200 pips, but it's basically non-moving. It's just kind of sitting in a broader congestion range. So what we're going to watch is to see if we get a break or hold this level. If we get a break of this level, then the range is still in play, and we could see it move back down to 128.80, and then that could favor, because we're already through all the fibs from this move higher, that could favor a continued move lower, and the ultimate game would this be the bottom of the range here around 126.60. That's what we'll be keeping our eye on if we continue to move lower. But if in the next week we do get a break and a break higher here, that's where it's going to be interesting. We could see some congestion. What I would really be looking for, and I think everybody would be looking for, would be a break of this 131.61 level, because if we do get a break of that, then we could see a trend shift and maybe a little bit a move higher and so forth, and break this momentum downwards. So in the new week, we're going to be watching this 129.90 level, and 128.80 is our first level of resistance, and so forth. The Aussie USD has also been interesting theory. The pair has moved down pretty significantly in this descending triangle, descending trend line, descending channel right here, and it seems like we found locator support right here at 101.45. That's what we're going to be watching. This 101.45 level is pretty key daily price support. We're going to be seeing if we can get a hold or break at that level for a bounce back higher towards the 102.75 level. But if we do break below this 101.45, we have lots of room to fall. We could go down towards 101, and then the ever significant parity in this pair, the one even level. Just can't talk today. The 103.75 level, though, is the top of this current range that we're going to be watching. So I'm going to be watching between 103.75 and 101.45. We need to break this 103.75 level to break the momentum downward. If we continue this push lower, like I said, we'll look for 101 and follow our 101. It's pretty simple in that pair, as it is with the Great Britain Pound USD. The pair opened up the week with a break below. Yeah, let's go back actually. With a break below this 152.30 level, which had been significant support. You can see the pair had tested it once, twice, 3, 4, 5 times, and then the cross broke below it, and we can see that the pair is moving lower, and it is currently testing this 149.50 level, which will be key. Key support here, just in the fact that what I'd like to see is a bounce back up to the top of this range, giving us an opportunity to go short once again. But you might once again be a little bit nervous about this pair because it has basically just traded in a very narrow range. Like I was trying to find a base this week. I mean, look at this. It started out the week with the gap down towards 105.75, and then we just kind of bounced back and up and down in this range until we had the bad PMI today that moves the pair down towards the 150, but it did not close below 150. So I will be watching this price action on a 4-hour candle in the open next week, looking for a push higher. If I jump down to a 1-hour chart, which is I normally base my swing trades on, it's not looking pretty right now for a trade towards the top side, but I would favor if they get a hold at 150, at least a push back up towards that 152.30 level. CAD pair, I don't really follow this pair any longer. It's too slow for me. But you can see it has support here at 102.15 and resistance here at 103.16. It is above the fib level. It probably, let's see, favors a continued move higher all the way up towards the 103.62 and 104.50 level in the long term. The New Zealand USD, you can see this pair after breaking, also another non-exciting trading, after breaking below the ascending trend line at the cross, basically the wedge I talked about a million times. After breaking above that this week, you can see that the pair has stumbled a bit, and now the cross is back below the 82.88. Well, when it stumbled below 82.88, it went down to test 82.20, and now it looks like we're just ping-ponging here, maybe forming a triangle maybe on the 4-hour chart. This wick, we would have to disregard the wick and just do the meat of the candle. It's not really, can't decide, it seems like where it wants to go. It's been trading in an extremely narrow range. I'd like to see any move back up to this trend line as an opportunity to maybe see another push down lower, but you'd have to watch the odds because these pairs are going to try to trade basically a lot of correlation there. Break of the 82.20, then we could see 81.50 followed by 81. The yen, basically as I've been saying, the pair has settled down. We have a range 94.50, 90.20, but even a more compact range if you want to do it, 90.82 and the 94.50 area. The pair is testing about the pivot in the middle of the range at 93.21. We'll see if we get a break or hold there. Get a break, we could follow up to 94.50. Get a hold here though, we could see a push down here. Now you have to be careful with the JPY pair because it's going to trade off any news out of the U.S. regarding the budget plans, and we could see spikes in either direction on this. And the Euro JPY, same thing after breaking out of the triangle that we were talking about earlier in the week. The pair has basically just been consolidating a pretty narrow range. We're going to watch the pair for a break. It's pretty simple. It's how to trade this heading into the new week. Look for a break low here. Well, we have 120.35, so let's go 125, and we'll go on the top. We go 122. So we'll look for a break of that in either direction. When we get that break, then we'll be looking just to see a little bit of momentum. Break 122, we can see a push, but there's not much there. 122.50, break of the 121.24, we could move down towards maybe the bottom of the range of 118. You have to watch that and watch the price action. And basically, we just want to get out of this consolidation range. That is it. I'm going to be posting the monthly results on the blog for trading, and everybody have a great weekend. Keep your trades keen and play it safe.